So it looks like we finally know who's set to replace Jerome Powell once he goes ahead and leaves office, because just a few days ago, Donald Trump announced who his next draft pick is going to be. And I know you're probably sitting there already saying, this sounds pretty boring to me. Why do I care about this? Well, I'm here to tell you that this is the type of decision that's going to impact how expensive your life feels for the next several years. So this week, I'm going to be breaking down who Kevin Warsh is, what he's really about, and what can we expect if he is confirmed. So let's get into it. And we'll be back in 3, 2, 1, we gone. Welcome back, family, to another episode of the First Sip Podcast. I'm your host, Dikembe Smith, and this week, as we sit here and sip on some good old lemon ginger tea, we are breaking down the latest news that came out about who our next Fed chair is most likely to be. Now, I don't know if you're like me, but I was sitting there wondering if it was going to be Scott Bessent, because he was pretty much just putting himself out there, right? Saying like, I'm the guy, in every way that he possibly could without blatantly saying it. And just a few days ago, Donald Trump came out and said, you know what? I'm nominating Kevin Warsh to be the next Fed chair. He's going to be the guy to steer us to the glory land. And once we get Powell out of here, this guy who's just been causing chaos, once we get him out of here, things are going to be great. So of course, this led me to diving in and saying, okay, well, who is this guy? Who is Kevin Warsh? Because the last time that he was the last time that he was a Fed governor, I was back in, let's see, what grade? 9th grade, 10th grade? So of course, I wasn't paying attention to those things back then. But once I saw the news, I'm like, you know what? Let me dive into it, because if I know one thing about the last 5, 6, 7 years, is that Jerome Powell has had a very significant impact on what has happened in this economy. So when I'm seeing a new person being positioned for the role, of course, I'm going to want to look into it and say like, okay, what should we expect now for the next 7 years? Because if this guy does get confirmed, he might be here with us up until 2030, 2031. And like I said, these people make some high level decisions that trickle down in everything from interest rates, job security, overall management of inflation. So we should pay attention to this. Like, let's take Jerome Powell, for instance. Over the past 5 years, we've seen him navigate through the pandemic and through that super inflationary period where we are all scratching our heads wondering, are prices ever going to come down? I mean, you remember when eggs were $13, right, for a 12 pack? And we're sitting there wondering, this can't be the way the world is now. Right now, I mean, eggs now are still right around like $4, $3, depending on where you're shopping. But some of these things haven't come down all the way to where they used to be, right? I remember when eggs used to be about $2.50 for a 12 pack, $2 for a 12 pack. Yeah, those days are gone. But Jerome Powell, like I said, was somebody who was there setting the rates, going and breaking down, okay, what's going on with the economy. He is the point person that everybody looks at in that time, right? When we were all, like I said, scratching our head, trying to figure out what's coming next. He was kind of like that what's the word I'm looking for? The lighthouse, right? That guiding light that showed us, okay, this is the way through. So depending on where you sit on this side of the discussion, right? You may believe that he didn't do a good enough job of cutting rates. You might think that he should have, cut them faster. You may think that he shot the rates up way too high and it kind of stagnated things. Or you might be on the other side and say, you know what? He did exactly what needed to happen for inflation to slow up, for all that crazy buyer activity that was going on where, like we talked about before, where home prices were going up 20% year over year. We need to slow that down, right? And those are certain things, certain guardrails that he put into place to say, okay, we're going to raise this interest rate environment because if you guys don't notice, it's kind of the wild, wild west out here. And like I was saying, depending on who you're listening to and really what their interests are, you see that's where this discussion kind of breaks off, because one side of it, once again, says we need to be in a lower interest rate environment to stimulate activity, stimulate investments, stimulate business growth. And on the other side, there are people saying, whoa, we got to pump the brakes, because if we don't pump the brakes, the economy is going to break and be broken forever at a point where we can't get things to slow down and come back. Right. So that's why I'm looking at this and saying, OK, with this next person who's stepping into the position, Kevin Warsh, what is he about and why did he nominate him? So as I was looking at it, right, Kevin Warsh kind of comes from a different school of thought, right? Like he looks at things a little bit differently, but not to say that he's all about the wild, wild west activity either, right? He last was in the Fed governor position back between I believe like 2006 to 2011. So right around that time when the financial crisis was hot, right? Things were just crashing all around. Everybody was losing either their homes or jobs. The Wall Street was looking crazy. And that was a time, if you think, like I said, if you think the pandemic was bad, financially, the great financial crisis was even worse because there was no stimulus, right? There was no ongoing checks going out there and saying, hey guys, here's more and more money that's going to keep coming to you to keep, to get you through this time until we figure things out. Nope. If you were losing your home, you might have had maybe some sort of modification you were able to do for a certain period of time. But if you lost your job, you were down and out, right? That unemployment wasn't looking the way it was during the pandemic. And these are things that people really had to sit there and try to like crawl their way out of and go through that, like I said, that environment where you don't know what's coming next. And who was there during that time? Kevin Warsh. He wasn't in the position that Jerome Powell is in, but he was in one of those roles where he is able to influence and vote on what direction we think we should be doing with the rates, right? Should we keep them super low like they were coming out of the financial crisis? Because like I said, I've talked about this before on a couple episodes ago, but during that time, they kept rates pretty much right where they were around the pandemic, right? That 1% where quantitative easing is just going crazy. They were keeping these rates as low as possible to try to stimulate some sort of activity and keep things going. Now, fast forward to where we are now, Kevin Warsh has been outspoken and has said plenty of times that he doesn't believe that they're doing a good enough job at managing the current environment, right? He thinks that they should have cut rates a little bit faster, but at the same time, he believes they should be cutting some debt off that balance sheet, right? Because if we know that there's one thing the American government doesn't manage well, and that, a lot of the institutions around it probably don't manage well, from what we can see, is large sums of money. And when you look at the amount of debt that they seem to accumulate year over year over year, it is in the billions and trillions, right? So he's looking at this stuff and saying, yo, we need to lower the debt on this balance sheet, right? And start seeing, okay, what can we do to start affecting, the economy in a different way other than just waiting for rates. So this is something that I'm looking at and saying, okay, he's going to come in with a different train of thought and say, okay, what is another way that we can attack this? And I know Donald Trump is probably loving this and probably seeing how close he can get to controlling this next person who goes into this, because even though he nominated Jerome Powell to take over, if you didn't know that, yes, he was the one who nominated Jerome Powell in his first administration. So that is why Powell is there. But if you look at their relationship over the past year, you wouldn't know that, right? You probably wouldn't believe that. But Trump is probably looking at Kevin Warsh now saying, okay, I need to stay as close as possible to this person and make sure that he can get my agenda across, because listen, we got to make sure that the economy stays in a good place because of simply approval ratings, right? You got to make sure people are happy, and you don't want to be the president that gets left with the legacy of, man, he went ahead and shot inflation through the roof again, and people were worse off than they were back during the Biden administration, right? Nobody wants to, he definitely doesn't want to leave office with that type of legacy. So I'm very, very interested to see what happens after this next person takes position. And once again, that's if Kevin Warsh goes ahead and gets confirmed. So of course, one of the main things I'm looking at and why this should really matter to, most of the people who are probably listening to this, let's start off with housing, right? Housing has been one of the things that have been affected the most over the last few years because of the interest rate environment that we've been in, because interest rates had to go back up, almost double from where they were in 2020, 2021, because we had to slow things down, right? So the Fed said, hey, pump the brakes. We got to slow things down. Interest rates are going to be in the 7s, they're going to be in the 6s, and you guys are going to have to be a little bit more strategic about how you're planning things, right? So that's just one area. You also look at it from a job security standpoint, right? When things like this are happening, businesses aren't still hiring like crazy, right? Money is a lot tighter, so they have to be tighter about their decisions, which one of the most important decisions any business is going to make is who they hire, right? So you looking at these things and saying, okay, in these types of environments, we can't have people coming and going, right? We have to make sure that we can lock down our talent and secure them so they aren't just hopping from job to job to job. And at the same point, we can't open the hiring gates as much as we may have been able to a couple of years ago when liquidity was flowing and the money markets were just open, right? Everything, man, the amount of money that was going around from 2020 to like 2023 was ridiculous. ridiculous. Like I said, when I was still working at the bank, I would see people come in for SBA loans, for the I forgot the economic like disability. There were so many loans where you walk in with an LLC that you just set up last week and you said, okay, great, now here's your 20,000, 50,000. And now God knows where all that money went. I remember talking to a guy a month ago who told me he got a $76,000 loan and he doesn't even know what he did with the money. So when I hear stories like that, right, I think sometimes we forget about where we were and why things had to, like I said, slow down the way they did to get us back to where we are now. Because like I said, businesses were going crazy, but now you look at it today, it's not in the same place. And when I say businesses were going crazy, I know there were a lot of businesses that were also shut down. But if you look at it on the online space, right, people were working from home, those kind of businesses that were able to pivot, oh man, it was a very interesting time. But like I said, with this time that we're in now, we need to pay attention to, okay, well, what does this mean for us going forward, right? Is this going to be that type of environment again where the money is going to be flowing, right? And things are great to Kembe. Oh, let me go ahead and buy that, start planning for that next house or planning for that next car because the credit card interest rates and the loan rates are also going to be dropping again. Pump your brakes. I don't think that's what's happening yet, right? I think what is most likely going to happen if Warsh gets confirmed and he steps into that, he's going to give it some time before he makes any drastic cuts, right? Because like I said, he's more concerned about the kind of debt that's on the balance sheet and showing how can we free up more money that way than directly affecting the rates. And of course, those conversations are going to have their own impacts on rates, right? People might see that and say, okay, this is putting us in a more optimistic mindset. So let's go ahead and lower the mortgage rates that you're seeing from that side. And then also when you're considering, okay, like we talked about before, people who are sitting on the side waiting to refinance, investors who are looking at certain things and saying, okay, what should we do with our money? These are the decisions and the conversations that they're looking at and saying, okay, what should we do? Should we be conservative for the next year or two? Or should we really start getting ready to move our money around and start looking at what that next step is going to be? Either way, you should start planning and figuring out, okay, what is the, like almost like game planning, like, okay, if this happens, then what? Or if this happens, then what happens, right? Like I said, if interest rates go ahead and cut significantly and we're looking at the end of this year at the mid fives or the low fives, do you know what that does for somebody who's in my space as a real estate agent, right? Somebody who talks to investors every day who are looking for properties to go ahead and buy. It changes the game. And I know it doesn't seem like a huge jump from just a percentage point, but do the math, right? You go online and pull up any mortgage calculator, look for a home in your area for the price point that you believe you can afford right now. And if you don't know what you can afford, you can also put that in and kind of get an idea. Best way is always to reach out to somebody, a lender, mortgage broker. So if you ever need help with that, talk to me, but go right online, pull up one of those calculators and see, okay, what's the difference between a 6.5% interest rate versus a 5.5% interest rate on my mortgage? If I was to get an investment property, if I was to get a primary residence, what does that look like, right? These are the things where it starts going from, okay, like, well, why does this matter? And to turning into like, how can I take advantage of this news now that I know why it matters? And like I said, these are things where you can get an idea and say, okay, if in the next year or two, if rates do get to that point, let me make sure I'm really positioned well to go ahead and attack that investment property that I've been sitting there and thinking about, right? Maybe you want to go ahead and buy a duplex, something that's been on top of my mind, right? I'm sitting there and I've been looking around and saying, okay, what would be the best property for me to go ahead into, get a great fixer-upper and really go ahead and make that a next project? Because that is just something that has been in my mind now for years. But like I've talked about before, between starting a business and the type of environment that we've been in for the last couple of years, things have been very tough. So I've been sitting there doing the research, making the plans, right? Making the investments where I can and positioning myself for what's coming next. So I want to know what you guys think about this. If you've done any of the research, right? If you've seen, okay, like, anything about his past and like what he's really into, or, if you think this is just, a play from, Trump to kind of stay close to somebody early on and just create more chaos with Jerome Powell, let me know as well, right? Because I'm here to talk about it from all different angles. But like I said, this is something I'm going to be paying attention to because I think it's some of the most important news when it comes to economic and financial news. But I'm going to keep bringing the information to you guys, right? But before I go, I do want to let you off with my content rec of the week, which I actually got right here. Now, this was a recommendation to me a while ago, and I had started, but I had never finished it. And it's something I'm diving back into now because, like I said, as we go ahead and move through life and move through these years, you start to realize that certain things start to get rewritten and people start to forget things when it comes to history and how we've gotten to where we are now. And if you aren't familiar with this book, The Color of Law, this is by Richard Rothstein, and he is a fellow of the Economic Policy Institute, right? And these guys pretty much they are. You think I sit here and talk about economics? They live and breathe it, right? And when they sit there and study why things have happened, from a social level, from an economic level, it really gives me this feeling of like, yo, this makes sense now why these things happen the way they do. And specifically about this book, it talks about how America has been, divided on purpose, right, from a segregation standpoint. Now, if you aren't familiar with what happened here in America, right, during the 1900s, it was a time when America was still extremely segregated. Now, there are definitely parts of America now that are still segregated. But back then, I'm talking about like me and some of my white friends, we couldn't be sitting in the same school, right? We couldn't be living in the same neighborhood. And this was done on purpose. Now, as a real estate agent, as somebody who loves real estate and is just always, trying to learn more and more about it, these are the kind of stories and the history that you need to know about, because segregation and redlining are things that if you don't know about it, these are the things that will start popping back up. And you're asking, okay, Dikembe, how will this stuff ever pop back up? Google over the last 10 years how many instances there have been from banks getting caught from, discriminatory mortgage practices, or people being, getting different appraisals on their homes because they are black versus being white. And trust me, if you don't know me, I have plenty of white friends. I got a group chat with my friends who I grew up with back in the Poconos. So like, I'm not one of those people who's like, oh, it's us versus them. I'll probably ever be the last person to say it's us versus them. So when I look at these things and I hear these stories about, things that are still happening today, I feel like it's a part of my duty. Like I said, not only as, what I do for work, but of something that I'm getting ready to, invest myself more into, not only financially, but also from a time standpoint, right? What I'm planning on doing with my life, because there are certain ways where you can, make sure that you're investing responsibly and making sure you're not contributing to a system that continues to not be, and contributing to a system that doesn't allow everybody to win and take advantage of it, right? So when we talk about, okay, let's go ahead and fix up a home and rent it out to people. Let's not rent it out in a way where 80% of the people who live in the area can no longer afford it, right? Now, of course, you want to make your money, but these are things where you start to really systematically mess up a certain population, certain neighborhoods, because of decisions that are made. And some people may make it ignorantly without them even knowing, and some people make these decisions on purpose. And the ones who are making it on purpose are the ones who are going out of their way to set 25, 30, 50-year plans on how they plan on seeing this through. So like I said, when I read things like this, it is about how can I educate myself to know, okay, what has happened in the past, what is currently still happening today, and how can we prepare ourselves for what is to come in the future if these things do keep going on and if we don't push back against them. So, like I said, check out this book, The Color of Law, right? If you want to understand more about the segregated history of American real estate and how a lot of these neighborhoods have ended up the way they are today, right? When you look at it and say, okay, why are a lot of these inner cities the way they are, right? Why aren't inner cities more developed? You would think because they're next to some of the most expensive places in the country that these cities would be well developed. Well, like I said, do your research. Start understanding, okay, what happened when white flight took place and black people started moving into certain neighborhoods. If you never heard these terms, there's probably a reason, or like I said, you may just not have had the opportunity to sit there and say, let me look into it. So go ahead, check this book out. Let me know if you've already read it and let me know what you think. But until next time, stay tuned, stay curious, and as always, enjoy your first sip.